Bitcoin is coiling up and potentially getting ready to do something explosive, potentially to the upside, and I want to explore this with you here in this video. But before I get back into it, we are back in Dubai, back in the home base, back in the HQ. It feels amazing. Got the standard microphone that you guys know and love, and a brand new laptop, so all the technical issues should be gone. I don't want to waste your time with that though. Let's get straight into the analysis, because this to me is far more exciting. We obviously have been setting very, very nice patterns of higher lows within this market, and of course higher highs as well, which is fantastic to see. Now, we haven't actually set a substantially higher high. If you take a look at the way that we peaked above that previous high, we didn't really do anything much, and really if we zoom in and take a closer look at what happened, what we saw here was that the market was basically just trading up, sideways, and then deviated up with quite obvious, HFT bot trading action, and then fell right back down, which is just evidence of the range being very dangerous. I'm glad that I wasn't trading in this range. Obviously, I've been super busy over the last week. I just turned 21. I'm now an adult. Here we go. I'm in the game, ladies and gents, finally. And since then, we have seen a little bit of a decline here. We had a nice a broadening wedge that looks something a little bit like this, which ended up breaking to the upside. But for the most part, the market just can't really seem to figure out what it wants to do. Now, I do have some reason to believe that we could be looking at quite a bullish setup, and I'm going to talk about that in just a little bit. But before I get to that, this is something that I think looks very, very important in the market right now, is this $22,700 level. Now, this is a level that we were watching in the past already, but it's very nice to see that the market has been able to bounce off this level. I don't want to see us losing this market structure. I don't want to see us setting a pattern of lower lows. So this is now our low that we have stuck in. Obviously, we could fall below this and carry on, and then we would just say that this is the new low, not this one here. Kind of like what happened over here. We ended up falling below it and setting an even lower low, but the trend of higher lows continues. I know this is getting a little bit confusing, but that's it. I'm not going to get more complicated than that in this video. And so what I'm liking here is the fact that we are finding support, and really all we have to take note of now is, again, just zooming out and reminding ourselves what this range actually genuinely consists of, right? I mean, there just isn't a lot of real resistance in this range, according to what I can see at least. We've basically got this kind of consolidation that was taking place right here when the market first managed to break up at the end of 2020, and then the market just had a rocket ship rally up towards that, basically that kind of $30,000 level all the way up over here, which kind of lines up with where our next area of resistance would be, according to some of the price action that we saw earlier this year in May of 2022. And so the fact that we're struggling here shouldn't come as too much of a surprise. Now, I would have liked to see that the market can rally up a little bit more aggressively than this, but the fact that we haven't done so far is okay in my opinion. The thing is, what I am taking note of right now, just looking at the shapes on this chart, one of the things I like to do is kind of, everyone's trying to like read between the lines and get a scope for what's going on with like a real big edge in the market, maybe using crazy indicators and stuff like that. And that's cool. I get it. I can understand why you would want to do stuff like that. But I just want to look at some of the pretty obvious stuff in this market. I want to look at, well, how was the market trending up before? Look at how we were trending up before. It was kind of, if you draw a line that kind of averages out the price action, we can actually use a moving average. This is going to be a little bit more scientific. If I take this red line right here and I just change this down to, I don't know, let's say the 15-day moving average, this is perfect. And then what I want to do is actually just hide the chart so that you can't see the candles. This gives us a really good idea of what this market was kind of doing. Let's make this even more short term. Let's go for 8 on this moving average. You're going to start to get a really good idea of what this market was doing, where previously, it was kind of, it doesn't really even look like it was trending up over here. It was kind of trending up in this range, but now it's a lot clearer to see that the market is aggressively rising up, right? Like before, it wasn't so clear to tell what was going on. I'm sure if we zoom out again just a touch, I don't know, let's say to 12, you might get an idea that the market was kind of slowly starting to trend up a little bit, but now it's very clear that we have become significantly, markedly more aggressive is the way I would put it. And to me, that's a really, really good sign. The other thing that I saw, which really jumped out to me, if we bring the chart back on, and remove this indicator, the other thing that really jumped out to me now is just seeing that it almost looks to me like the price is kind of coiling up in this range right here. It looks like we're getting ready for a potential blast off either to the upside or to the downside. But of course, we're doing this within a short, honestly, more like a midterm uptrend now at this point. I mean, this uptrend began in the middle of June and we are now in August. Okay, so this is like a 45-day affair in this market. Now take a look at this. Yeah, bam, 46 days. So this is relatively midterm now, and the fact that we're just kind of topping out at the same resistance level, but we're still setting these higher lows. I mean, if the pattern was a little bit cleaner, we would have an ascending triangle pattern where essentially the market kind of, let me think of how to draw this. The market would, bear with, I want to get this right. The market would kind of conform to a pattern that looks a little bit like this, where we kind of trade into a range, we find resistance, we come down, and we're setting higher highs, and we're setting the same highs but with higher lows, and that tells us the price might be exploding to the upside. So we have the key characteristics of that, which is simply that the high stays the same, bam, right here, the high stays the same, but our lows keep on getting higher. So that is a sign that we might be wanting to push to the upside. And then again, one of the other good things that we have going for us right now, because we've been able to rally up, is some quite nice areas of support on this chart. I mean, we've got an absolutely beautiful 4-hour Ichimoku cloud right here. If we end up just kind of trading sideways over this next 1 or 2 days, we're obviously going to start having some momentum on our side. Now look at this, we've actually got a big Ichimoku cloud on the daily time frame. Let's get to that in a minute, but on the daily time frame, with our momentum, we've actually managed to peak above this ribbon and now potentially getting ready to bounce off it to find a little bit of support. I mean, it's not the best analysis. I would have liked to see that we would go up a little bit higher and then come back down for a retest. So I don't want to act like this is a bullish EMA ribbon right now, but at the same time, we are starting to get those crossovers, right? Take a look at this. You can see our yellow line crossing above the orange and so on. We are starting to get these crossovers where these moving averages, in the short term on this daily time frame, are showing that we are bullish compared to the long-term trend, which is a sign that the market could be getting ready to reverse and rally upwards. Let's take a quick peek at the fear and greed index. Been a solid minute since we've taken a look at something like this, but I think that this is going to be pretty useful. Yeah, we got a reading of 34. I mean, we're not moving too much. We did end up peaking at 42. That was on the 30th of July. What happened then? Yeah, bam, that was right there. I was honestly just not sober in Mykonos, so I didn't even know what was going on the chart back then. But yeah, that was the day of our HFT action right here, which is nice to see, because the fact that our fear and greed index ended up peaking in pretty much neutral territory, but then that the market ended up coming back down. To me, that still tells me we're in quite a healthy, functioning market. What we don't want to see is that these numbers get too high, because if they get high, we're probably going to see the end of our rally, which is exactly what happened. I mean, it's the same thing that I was warning about. If you guys remember what I was saying over these last couple of weeks, because you've been smashing up those likes and staying subscribed to the YouTube channel, you're going to know that I was saying as soon as we get to like 40 and above on that fear and greed rating, that's when I'm going to start to become a little bit more concerned, a little bit more bearish. But until then, I do still think that there's plenty of reasons to be bullish in this market right here. And so that is what I've been keeping a close eye on. So I do like what I'm seeing right there in terms of potential support. Now, like I said, there was this huge Ichimoku cloud right here on the daily time frame. I mean, this is absolutely bloody enormous. This is one of the biggest areas of resistance Bitcoin has ever had in the last, I don't know, year or so. I mean, if we actually just take a look at this over the last year, I mean, we've only had 1, 2, 3 instances of heavy resistance like this on the Ichimoku cloud. This one was disastrous for Bitcoin, and this one didn't matter. So we've got a 50% hit rate right here. I think that we shouldn't be ignoring this though. And the thing is, the good news is that we absolutely can trade into the Ichimoku cloud. I mean, we've done that many times. We can kind of peek in and get rejected very quickly, or we can rise up and fight a good battle before eventually tumbling lower. I mean, these do represent clouds of resistance. This isn't like a brick wall where the market's just going to abruptly stop, rallying like a car crashing into a wall. That's not quite what this is. These are clouds. I mean, these are a little bit more spongy. And to me, I think that's important, because that does potentially indicate that we could be looking at a rise up to that kind of $28,000-$29,000 level, putting us in this resistance area firmly, before then potentially continuing down. Maybe we sweep that low, fall deeper into the teens, I don't necessarily think that's going to happen, but obviously I have to assume that anything is on the cards. I have to be open to all possible interpretations on this chart. But what I am seeing right here, to me, is good. I like it. I'm not worried about the fact that we have this resistance right here. I think that we are going to be able to break it. And the good thing is, because of this green line, us not really having any resistance beyond this point right here, I honestly, I am a little bit surprised that we haven't been able to break up yet. It's not too surprising because we've had this area of resistance. So if there's anywhere where the market might falter, it's right here. So in that sense, it's not surprising. But by now, I certainly would have expected that we get that breakout. The fact that we don't have it yet is not concerning to me, because we do still, like I said, we do still have this pattern of higher lows. We're getting stuck at the same ceiling. I mean, this is the most classic bullish pattern that you could see emerging on the market. I don't know why nobody's talking about this. Probably because it's not super obvious. You don't actually see it instantly, if you don't have a trained eye for it. But obviously, we're just looking for simple signs. I mean, I'm not trying to reinvent the wheel. I'm not trying to be a rocket scientist or anything. I'm just asking, are our lows getting higher? If yes, then good. And is our high staying the same? If yes, then kind of still good. It does paint that classic breakout pattern. So, guys, I'm liking what I'm seeing here. That is the bottom line. Now, this obviously all puts us in a very, very fun trading environment. And you guys, you already know the deal, ladies and gents. I'm trading all of this on Bybit. If you want to get inside, you're getting over $4,000 completely free of charge by checking out my link to Bybit in the description down below. Guys, look at how silky smooth the production quality is today. I haven't had a single hiccup today. This is absolutely amazing. If you do want to check out Bybit, if you want to trade on the very same platform that I'm using, then check them out with the link in the description down below. You're going to be getting over 4K, like I said. Well worth checking out. It's free money. You don't even have to use the exchange. But of course, you're going to fall in love with it because I love it. And if it's good enough for me, well then, it might just be good enough for you. With that though, I do have to get going. I hope you have enjoyed this one. It's been a very, very quick one. I'm going to come at you guys maybe with a live stream later on, perhaps tomorrow, maybe when the breakout comes, if we do get it. I am liking the look of this market. I just want to take a quick peek at Ethereum before I head off, actually. Yeah, Ethereum is battling quite an area of resistance right now, but the good news for Ethereum is it's quite similar to Bitcoin, actually. If we are able to break this area, I'm expecting a very, very easy rise up for Ethereum beyond this area. That's oh my God, that is a 40% range. That is absolutely beautiful. And if we take a look at Bitcoin's range, Bitcoin's only got another kind of 15-16% until it starts to encounter resistance. So Ethereum could be ready for a nice little blow off. Ethereum against Bitcoin standing very, very strong indeed. You guys already know that I am always more bullish on Ethereum than I am on Bitcoin long term. And so this is very, very nice to see indeed. So I'm going to be keeping you guys updated on all of this stuff, but for now I do need to go, so I can't give you any more analysis than this. Hopefully it has been comprehensive enough. If you have enjoyed this video, then you know what to do. Smash up the like, subscribe, tick the bell, do all that good stuff. Guys, if you're excited for me being back in Dubai, getting right back on the content, guys, we're going deep, we're going hard. This is it. We're in the zone. I'm really excited for this. If you're sharing that excitement, then just show this channel a little bit of love. It's been about 9-10 days since I've made an upload, so YouTube is going to be absolutely slapping me in the face with the algorithm, and I need your help to pick it back up. So anything you do, I know it's a small thing to you, but literally anything that you guys do is incredibly, incredibly helpful. So thank you all so much if you've already done it. If you don't want to, that's also totally fine. Thank you all for watching this, and I'll see you all in the next one. Bye bye.